Alright everyone, welcome to this first public trade review where I will be sharing the top-down analysis on how I made 3% trading the euro against the Japanese yen last week. First of all, we're starting on the monthly time frame for our higher time frame analysis. Fundamentally, the yen is weak, very low interest rate against the higher interest rate of the eurozone. We can see that bullish PDRAs are being respected, monthly internal range liquidity here, and whilst doing so and mitigating those PDRAs, we form SMT with the correlated asset being the pound against the Japanese yen. We can see that all throughout this parabolic run upwards, again, bullish arrays are respected, bearish arrays are disrespected, and whilst price is mitigating these internal range liquidity pools, we are forming SMT with our correlated asset. Then more recently here, we had this redelivered rebalanced PDRA, meaning we failed to create a FVG, but this wick traded down into this wick, being an immediate rebalance, but this now creates our redelivered rebalanced PDRA, and again we formed SMT with the pound against the Japanese yen here between October and December of last year. Now from the monthly we'll drop down into the weekly time frame here, where we'll get a more close understanding of the past weeks of price action. What we can see again, we have that monthly PDRA transposed onto the weekly, and we can see that this weekly fair value gap overlaps with the monthly redelivered rebalance, making it a stacked PDRA and thus higher probability. We mitigated a few times, made a higher high, came back into it, formed SMT with the pound against the yen. In this case, the euro yen was weaker. We took those trailed stop losses of people who trailed their stops here, and we took sell side liquidity going into that higher time frame array. Started moving away, disrespecting again bearish PDRAs in a premium of this current range. This FVG got disrespected. Started expanding higher again within that distribution higher. We formed SMT with again the pound yen, displaced higher here, formed this internal range liquidity pool very recently in April, and it tapped into it multiple times, moved away. We had this down close candle here that traded into that internal range liquidity pool, got closed above here, and then last week during the manual intervention on the yen, we traded down into that weekly high probability order block that traded into an internal range liquidity pool. So I will be looking for longs from that point. Now from the weekly, we'll drop into the daily time frame. And what we can see on the daily time frame is very clear that manual intervention here, where we had a big wick up on Monday of the prior trading week, all the way up to 171,600, and then dropped all the way down to 164. Large move down, a lot of people got scared, a lot of people got liquidated probably, but that means for us traders that there is a huge opportunity here. Now, looking into this fractal of price action, it's first of all important to establish the premium and discount of this high to this low, which I have annotated with the premium, which is this level here, and as well the monthly opening price of May. Now, right from the monthly opening price of May, we had again a manual intervention lower into that weekly order block delineated by this blue line, and whilst doing so, we created SMT with the pound yen again going into this daily wick, which wicks are gaps as well. Now that we have established our monthly, weekly, and daily context, we'll drop into either the 4-hour or the hourly time frame to look for an entry in line with my bullish drawn liquidity. And in this case, I'll drop down to the hourly time frame, where we will be taking a closer look at last week's price action in particular. First of all, what I noticed is we have this consolidation up here, being a terminus for a market maker buy model that would be in play in my opinion. Now from that consolidation, we had a big drop down, rebalanced this SIBI here to about the 50% level, another move down, taking the wick out, stopping people out here. And then interestingly here on Friday, we had SMT at the lows with the pound yen, being euro being the stronger asset, making the higher high, and the pound yen making the lower low, at that weekly order block key level. Now, when Friday trades into a higher time frame level and we create SMT there whilst doing so, the following week I could anticipate a Monday low of the week if we're bullish. I don't need Monday to accumulate and Tuesday to manipulate lower, because Friday already did that, and in line with the higher time frame power of 3 of the weekly, the monthly candle, with the monthly opening price being up here, the weekly power of 3 is less important than the monthly power of 3. So this right here is the smart money reversal of a market maker buy model that will at least send price back into premium, because it will seek discount arrays and rebalance back up to premium. The weekly order block being the discount array. Now from this move here on Friday, market opens up here on Sunday, trades up, and we can immediately see that these gaps are left open, and then this down close candle here supports price higher here. So we're seeing that down close candles are being respected and support price moving higher. Create another order block here, and then here on Tuesday during London session at 4 a.m. we trade down into this order block, and we create SMT with the pound yen again, with euro yen being the stronger asset. So we'll look for longs on euro yen. Then following that SMT, we create a fair value gap here. Now that fair value gap overlaps with this previous bullish candle. Now in the sell side of the curve, a bullish candle will support price lower and is a bearish order block. Now when it gets closed above on the buy side of the curve, we can look for a mitigation here, meaning old selling happened here and new buying will happen here if it overlaps with a bullish array on the buy side of the curve. If we then zoom in to this piece of price action, we can see that after the SMT formed, we made a fair value gap and we closed above this down close candle, now validating it as an order block. Tapped into it multiple times. This candle right here was my entry. This is where I entered. Stop was underneath these candles here. And I was targeting this low hanging fruit objective, which was still in discount of the range because the premium level is up here at 167.805. Very low hanging fruit. Almost certain that it'll hit because it'll most likely rebalance the premium. But any high resting below the premium is a very low hanging fruit target. Now entry was here. We mitigated that fair value gap multiple times, and then here on Tuesday during the rollover going into Wednesday, we created another SMT with a pound yen, again signaling to me that higher prices are imminent and the euro yen is more likely to expand higher. And then as you can see, going into the later portions of the week, the take profit being the external liquidity got hit here on Thursday during the London lunch at about 6 a.m. New York local time. Now, of course, we can hold a trade up to here, but because of the manual intervention on the yen, I was looking for very low-hanging fruit targets, and thus I took about a 1 to 3 risk to reward, risking 1%. No partials were taken, just a full pull. I'll post the executions here on the screen from MetaTrader. As you can see, we bought that fair value gap here, also an hourly chart, and we sold at that candle right here when we hit that buy side liquidity. Now I hope you took something away from this trade breakdown, higher time frame analysis, going into the weekly chart, going to the daily chart, and then executing on the hourly chart with that higher time frame premise in mind. And until I talk to you next time.